Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Wednesday, halfway through the trading week. Welcome to Modern Investing Techniques, episode 93. It's July 1st, 2026, and I'm Patrick in Vancouver. Midweek, let's reassess this week's positions and look for fresh setups. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. International Tech's first half outperformance gives Canadian TFSA holders a concrete reason to add global equity exposure beyond US names. The S&P 500 closed at 7,499, up 0.8%. The NASDAQ Composite closed at 26,214, up 1.5%. The TSX Composite closed at 34,857, up 0.1%. Non-US tech names led first half gains while US big tech lagged. Gold posted its worst quarter in 13 years. Oil prices moved on shifting US-Iran talks. The Bank of Canada rate decision sits in the fall. Sector rotation into international equities works by systematically overweighting regions showing relative strength rather than chasing single country mega caps. Today's data shows US big tech delivered solid but not leading returns, while emerging market and non-US tech names outperformed, creating a measurable spread. Canadian investors can implement this by allocating a sleeve of their TFSA to a broad international ETF such as XEF or VIU and rebalancing quarterly against the NASDAQ Composite. The approach has historically delivered excess returns during periods when US valuations stretched and global earnings revisions turned positive. Risks include currency translation losses and delayed reaction when US names re-accelerate. The key metric to watch is the rolling 3-month relative performance of the MSCI ACWI ex-USA versus the NASDAQ. This is the exact scenario where our earlier rule about closing price confirmation would have helped avoid chasing headline strength alone. Our practice investment of the day is a simulated weekly hold on General Mills. The ticker is GIS on the NYSE in the consumer sector. General Mills beat estimates by 14 cents with revenue topping consensus. That provides a fundamental anchor in a soft consumer environment. Entry is considered only after a positive close to satisfy confirmation rules. The initial stop sits 6% below entry. The target is plus 2% to plus 5% over the 5-day window if follow-through buying appears. This is a medium confidence setup because it rests on a single earnings catalyst without volume or technical confirmation yet. This trade demonstrates how to evaluate an earnings beat as a potential entry while respecting the requirement for closing price confirmation before treating the catalyst as complete. Yesterday's flash trade on MU entered at $1,233 at market open and exited at $1,213.56 at market close. The position lost 1.58%, or $15.77 on a $1,000 simulated stake. The NASDAQ rose 1.5% the same day, producing negative 3.08% alpha on that trade. The single-day momentum entry reversed without follow-through. This reinforces that earnings revision signals need sustained price action rather than opening strength alone. The rule now in effect is to require closing price confirmation before declaring any catalyst trade complete. Bloomberg Wealth Advisors outline a repeatable process for deploying a 6-figure windfall across asset classes using current valuations and risk budgets. Canadian listeners can adapt the same framework inside a TFSA by mapping the recommended equity, fixed income, and alternative buckets to available ETFs. The edge comes from forcing explicit position sizing before market moves rather than reacting after the fact. The Bank of Canada quarterly survey aggregates views from financial finance market participants on growth, inflation, and policy expectations. Investors can layer these consensus ranges into macro regime screens to adjust sector weights ahead of Bank of Canada decisions. The raw results are released on the Bank of Canada website at 10:30 ET on survey dates. ServiceNow jumped 4% after Guggenheim flipped from neutral to buy on strong software fundamentals. The upgrade came from a firm that had previously maintained a neutral stance on the name. Strong software fundamentals supported the immediate price response following the rating change. Listeners tracking enterprise software names saw the move play out in real time on the trading day. Adding now to the TFSA watch list allows monitoring without immediate commitment. Waiting for a closing price above the upgrade day high provides a confirmation step before any entry consideration. The source for this analyst action is investing.com. Qualys stock surged 65% after an Investing Pro fair value signal triggered a sharp re-rating on the cybersecurity name. The fair value model produced a clear re-rating signal that drove the outsized move. Cybersecurity peers provide a useful benchmark for assessing whether the new valuation level holds. Reviewing Qualys valuation metrics against those peers helps determine if the surge reflects sustainable fundamentals. The surge occurred on the day the Investing Pro signal was highlighted in market coverage. No immediate portfolio addition is required until the valuation review is complete. Gold prices declined after logging their worst quarter in 13 years. The quarterly performance marked the weakest stretch for the metal in that time frame. Precious metals exposure therefore faces continued pressure from the sharp drop. Portfolio holders with gold or gold miner positions can monitor daily closes relative to recent support levels. Trimming any allocation that exceeds 5% of total portfolio reduces concentration risk if support breaks. The move also affects broader commodity allocations that include precious metals. The source for this price action is investing.com. Demand for riskier mortgages dropped as the spread between 30-year fixed and ARMs narrowed. The narrowing spread reduced the incentive for adjustable rate products among borrowers. Canadian investors watching housing-related assets saw this shift limit the appeal of certain mortgage products. Holding CAD cash or short-duration fixed income provides a defensive stance during this period. Rotating into Canadian REITs is not favored this week given the reduced demand dynamics. The change in mortgage preferences reflects broader interest rate environment effects. The source for this trend is CNBC.com. The simulated portfolio now stands at $263.15 across 41 trades. The win rate sits at 51% with 21 wins. Cumulative alpha versus the NASDAQ reaches plus 11.0% across 30 benchmarked trades. Average return per trade is plus 0.64%. Our AI analysis continues to adjust position sizing based on the pattern of single-factor stories needing price confirmation. Imagine you bought a mid-cap Canadian name in your TFSA yesterday morning on a positive headline. Your market order filled at $18.45. Between the moment you clicked and the fill, the bid-ask spread on that name widened from 3 cents to 14 cents because two market makers stepped away during the first 20 minutes of trading. Quoted size at the inside bid dropped from 1,200 shares to 300, while ask size stayed thin. So your order walked the book and paid the wider spread. The effective spread can be measured in real time on most platforms by comparing the mid price to the actual execution price. The professionals always check level 2 depth and average daily volume before entering anything under 500,000 shares ADV. The biggest mistake with spread risk is assuming the posted quote will still be there when your order arrives. Instead, always use a limit order set no more than one tick inside the current ask on names below 1 million shares ADV. Before we wrap, open your brokerage screener, filter for consumer staples names that beat earnings by at least 10% in the most recent quarter, then sort by 5-day relative performance versus the TSX and note the top 3 for potential Monday entries. That wraps up today's modern investing techniques. Remember, every trade is a learning opportunity, win or lose. Subscribe, share with a friend who wants to invest smarter, and we'll see you tomorrow. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. And before you go, this show is part of the NARA Network, a family of daily podcasts on tech, science, and markets, each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen. Models and Agents, your daily briefing on AI models and agents. Find every show free at naranetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't last?